Why you should never buy an investment property above the appraised value. Hey everyone, I'm Clayton Morris. I'm a longtime real estate investor and founder of the company Morris Invest, which is a full service rental real estate company. And today I wanted to talk about buying investment properties above what the market says they're worth. And I want to tell you a little story, okay? Because this happened, we've had 3 clients in the past month come to us telling us that they've been working with other companies. And I'm not going to name any names, that's not why I'm here, but I really want to tell you this story. And they explained that they bought an investment property, or they were told that they would have to buy the investment property with these other companies above the market value. That was simply the cost of doing business with this company. That they were getting a property at a premium value, and this relationship of working with this turnkey company was the reason why they would pay more than the appraised value. So instead of a $180,000 price, which is what the appraised value was, they were going to pay $200,000 for this property. And I said, what? Like, I heard this a couple of times now over the past month, and I said, I've got to make a video about this to make sure that people don't do this. And I want to explain exactly why that is. But first, what is the appraised value? It's important for us to understand what that is. Appraised value is the estimated market value of a property as determined by a licensed appraiser. It's important to note that the appraised value is not always the same as the market value. Market value, of course, is the price that people would be willing to buy it for in a competitive market. You see stories outside of New York City and in San Francisco. Oh my God, this person paid $100,000 more than the appraised value. And because that's kind of what the market was asking for, because people were going crazy, they're paying cash money for properties instead of getting financing. And so they're paying well above what the appraised value of the property is. So that's the difference between market value and appraised value. Now, why should you never buy an investment property above the appraised value? Well, there are a few reasons why you should never buy an investment property above the appraised value, regardless of what some guy is telling you, some guy who's trying to make money. First of all, you're more likely to lose money. Let's just be honest. If you buy a property above the appraised value, you're more likely to lose money if you ever have to sell it. This is because the market value of the property may be not high enough to cover your purchase price. You paid $20,000 more simply to work with this turnkey company? That's garbage, because now you've got to build up that equity to get back where the appraised value of that property is. You should never, ever do that. Next, you'll have less equity. Equity is the difference between the value of your property and the amount you owe on your mortgage. If you buy a property above the appraised value, you're going to have less equity in the property right out of the gate. This means you'll have less to work with if you ever need to borrow against it, borrow money against it. We always encourage people to, take out perhaps a home equity line of credit if you can on the property, on the investment properties, and use that equity. Use that equity to build your portfolio. But if you're going already into this property in the negative, then you're going to have no equity to work with. Next, you'll have a higher mortgage payment. The amount of your mortgage payment is based on the appraised value of the property. Now, if you buy a property above the appraised value, then your mortgage payment will be higher than it would be if you bought the property at the appraised value. And another note about the mortgage here, this is a big red flag to look out for, because oftentimes these so-called companies that are getting you to buy a property above the appraised value have a bank internally where they have created their own version of a bank internally. And therefore, they're able to do loans on properties at above the appraised value because it's their own bank. This is a big red flag. We work with over 100 different lenders, none of which we own. Very different, right? Because now that bank is going to say, well, we're not going to give more money than the house is worth. Why would we do that? You would do it if you owned the bank, right? And you're trying to bring someone into this turnkey world where they're paying more for the property, and they can do that with financing. Yeah, we have financing on this property. Sure, you're going to pay more for it, but you have financing of a bank we own or of a fund that we own. Again, another red flag. There are a few other red flags to look out for that I want to go over as well. And you really should pay attention to these when consider buying investment property above the appraised value. Number one red flag, the seller is asking for a premium price. If the seller is asking for a premium price because for the property, it's a sign that they may be overvaluing the property, telling you that it's worth more than it actually is. Also, the seller is promising future growth. This is a big one. The idea that you're going to buy something and depend on future growth of that property to build back that equity. Yeah, go ahead and pay $200,000 or $280,000 for this house that's really only worth $250,000. So you're paying $30,000 more for this property because in the future, it's going to grow. Okay, that's the idea. You're going to invest in something like that? Makes no sense. Oh yes, the rent will go up eventually, 5 years from now, 6 years from now. So wait a second, I'm kind of totally underwater right out of the gate. I'm in a negative cash flow position. I'm in a negative cash flow position. I'm actually losing money by buying this investment property. Yes, you are, sir. You're doing that because we're such a good company and you're overpaying for this property. Okay, that's ridiculous. Another red flag, the property is in a hot market. If the property is in a hot market, it's more likely that the seller is asking a premium price. And again, that's why we don't invest in so-called hot markets, bubble markets, Boise, Idaho, Seattle, San Francisco, Las Vegas. We don't invest in those areas because those are hot markets that aren't good investment markets. Those markets aren't a place where I want steady job growth, steady appreciation, boring appreciation in some of the best jurisdictions in the country that aren't flashy and sexy. That's why we build properties at Morris Invest, our company, along with Sedera Wealth. We build them in these jurisdictions that are in the best rental markets in the country. And when people work with us, they're getting a property that's at the appraised value or below the appraised value. I know that sounds like you got to be making this up. You can't be telling the truth. But we actually are telling the truth because you're not only going to get an appraisal on the property from a third-party appraisal company and the bank that you're working with that we don't own. So you're going to get, you can go out and get a second or third appraisal if you want. The bank's going to do one. You can do one. You can get a third one if you want. And you'll find that it's going to be at or below the appraised value when you buy a property, a new construction property with our team. That's why I find it so infuriating that there are people out there who would take advantage of others by having them buy a property above the appraised value and telling them why they're doing it. Oh, this property will not appraise. Don't even bother. It's not going to appraise for what you're paying for. You're going to be paying $20,000 more than it's worth because of future growth or just to work with our company. So this is really a cautionary tale. I wanted to come in and tell you this. You should never, ever, ever, in my opinion, you should never buy a property above the appraised value unless you can give me a good reason why. If you can give me a really good reason why, I'd love to hear it in the comments below. But if you'd like to work with our team and actually buy a great investment property with a full service team, with a great cash flowing property, you can buy it at or below the appraised value. We've had clients who've literally gone under contract to buy one of our new construction properties, and by the time it closes in 3 weeks, 2-3 weeks, they're already in an equity position because it's below the appraised value. I'm sorry I'm so fired up about this, but I hate when our team talks with a client for the first time and they tell them that, yeah, we bought an investment property 2 years ago, but the company told us we had to pay more than the appraised value. That absolutely infuriates me. So please do not do that unless you can give me some good reason why. I'd love to hear it. Anyway, just fired up about it, guys. I just wanted to share this, and we'll see you next time, everyone.